We have a room full of people here. We got Dan bought 2 of his kids with him, and Hunter and Joey, and we got Chris Paulson still in the corner, and Ellen Thompson over there, and we're waiting for Paul Swingle to arrive. But something that happened to me today is I had 3 different emails that came from people that have been told that they're being laid off in the States end of April, end of May. They're on TN visas or H-1 visas. There's no jobs available where they are, so they've got to come back to Canada, because when you get laid off, and they will all have, well, the jobs that they had would all put them in that $150,000, $200,000 range, I would think, and they're going to be coming back. They're going to have 401ks, they're going to have IRAs, or have Roth IRAs. What should they do? Into that, I mean, they're coming back. They know, what should they do? And if they phone you, what do you do for them?
Well, for example, typically anybody that's...
Because I'm going to tell all of them to watch this.
I mean, typically, if they're with a larger organization, they're going to they'll have a 401k, which, as you know, is like up here in Canada, like
a pension plan. Group pension plan.
So basically, depending on the 401k plan, if they're no longer employees of the company and so forth, then they have to, they basically would probably be asked to leave the program.
Yeah, roll it into an IRA or something.
So you have to roll it over to, number one, you're going to have to roll it to an IRA. And then you have a choice at that point in time. If you're moving back to Canada, you can either liquidate the IRA and pay the tax, or you can contact somebody like ourselves, and we will arrange, if you have a 401k, we can arrange to set up an IRA for you. We can take care of the process of moving the 401k assets to the IRA.
So you can do that from your place in White Rock.
Yeah.
Even if they're living in Atlanta, Georgia, or Sacramento, California.
Yeah.
You can do that for them.
Yeah.
And it makes more sense to have you do it than some guy down there that they're never going to see anymore.
Well, the problem they're going to face, David, is that once they move to an IRA, so that all fine and good, they're still in the United States, and then they move to Canada. Okay, well, if the IRA is at Schwab or TD Ameritrade or any number of broker-dealers in the United States, once you give them your new Canadian address, they're going to freeze your account.
Frozen. Can't do anything, actions in it. You're dead.
Right. They'll liquidate, but we've seen several cases of this. So basically what they're forcing you to do is move your account and find somebody who's capable or
looking after cross-border
business. So what we do is we have our American partners, and we use a U.S. custodian. So when we set up an IRA for this particular client, the actual IRA stays in the United States. It doesn't come, and it stays with our U.S. custodian in the United States. So, and it's all the right forms, all the, anything to do with the reporting and so forth is all U.S. domestic. We don't bring the IRAs to Canada.
You don't move the money across the border.
Money stays there. And basically, we can, so hypothetically, this client, is with large ABC corporation.
Can I do something?
Yeah.
The IRA stays in the States. The control stays in the States, but the mind is in Canada. Is that what's happening?
What happens is we have a partnership with our custodian. So the actual custodian is somebody who keeps all the assets, like a trust company.
Yep.
So we have a partner in the United States. It's a large trust company who custodializes all our IRA assets in the United States. Mm-hmm. All the custodian does is basically hold the assets, produce the monthly statements, take our instructions. They are not licensed to give investment advice.
Okay. So that's what I'm saying. The mind is here.
Right. We, as the investment manager / advisor, provide the trust company with the instructions. We would like to buy bonds for this IRA, or we would like to buy a fund for that IRA, or whatever. So basically, we can set up the IRAs for Americans who are coming back, or Canadians coming back to Canada with the American retirement programs. And in the IRAs, often when they come from a 401k, they'll come across as mutual funds.
Yeah.
Because most 401ks are basic. Well, they'll have a selection of investments, and basically they're approved mutual funds that the company has set up in the program, which the employee can choose. Okay, I want Fidelity this one, and so forth. So when it goes to your IRA, you're basically going to roll over these funds. You can roll over cash too. Then you come back to Canada, and so what do you do with that? you were restricted. I wouldn't say restricted. You had limited opportunities within the context of your American retirement program, 401k, now IRA, as to what you could do with the money. You could have a mutual fund, or another mutual fund. So what we're able to do for the IRAs is typically, for example, let's take a case where somebody's, say, 55, 60 and has been laid off by their American employer, has come back to Canada and retire. Mm-hmm. And they built up, whether it's in the 401k or an IRA, say, $500,000, for example. And they want to start living off using part of that as retirement income. We can create a portfolio designed, for example, with bonds and so forth. We have with our arrangements in the United States, we have access to all bond markets, all stock markets, basically every financial investment you can think of. So we can design a portfolio for this particular retiree to, say, a combination of bonds and high-paying securities, high-paying interest rates on securities, and design enough income to fund the IRA distribution every year.
Okay.
Just like a RIF payment, a RIF
Sure,
payout.
I get you.
So you're not reliant on a mutual fund where you draw down capital. You can actually take interest income and fund, and markets being what they are right now, you can actually create enough yield, income off these investments to fund your IRA distributions.
Okay.
Without drawing down capital.
Just like Grandpa said, never touch the capital.
Right. So, just recapping on the whole IRA situation. So first things, as I said, when they leave the company, they're probably going to have to move to an IRA. You'll often have a 401k and an IRA separate, because they'll have a couple. So you can move, like in our case, what you can do, we set up an IRA, we move your IRA existing where it says at Schwab. We'd move it into our plan. We'd move your 401k into the same plan.
Yeah, okay.
Simplify, one account, one
So,
statement.
and now it's dealable whether you're living in Canada or in the States, okay?
Yes, as you come back to Canada, you live here for a couple of years, economic order is restored around the world, and you get a job in Missouri.
Okay.
No problem, you didn't cash it in. You just move back, everything's in order, nothing changes. And you can continue on whether you're in Canada or the United States. So
you are in control of your money, and you don't have somebody saying, I can't. Because I want to make it clear, and people keep on writing to me and asking me or phoning me and saying, well, they say I can't do this, and as if they sort of blame you, the client. Like, I can't do it for you. You moved. I can't do it for you anymore. And really what it is it's their licensing. It's the effort that the company that you're dealing with went to deal. And I'll use TD Waterhouse, for instance. 5 years ago, for 10 years ago, they decided they were going to do a lot of this cross-border stuff. And they had 12 people that they were training to do this. And guys were out getting licenses and all the rest of it. And suddenly TD Waterhouse said no. Doesn't do it anymore.
That was the United States, right?
Well, in Canada too. The Canadian branches, people that were set up and working to do it.
In the United States, before Ameritrade bought Waterhouse in the U.S., and TD Waterhouse used to run a Canadian desk in San Diego. And they would, if you were an American and you wanted a Canadian dollar account, they could actually facilitate it. But when Ameritrade took over TD, they killed the Canadian desk. They say it's just not profitable, there's not enough money in it. Well, there's a limited amount of clientele, a limited amount of demand. So they shut it all down. So which is one of these. But it becomes a cost issue in times like this. All firms, even the financial firms, are cutting costs as fast as they can. So anything that's not producing revenues or doesn't appear to be in the next...
Well, sometimes it's short-sightedness because the guy is going to get his job back in the States. And,
well, sure. But in our case, it's a little different too. Not just having a license in the U.S., it's having it both ways. Because as I was mentioning, you gain a little as you build the practice and so forth. There's lots to learn in this business. It's something new every day, as you know, and you do build up expertise in the area, which whether you're coming or going. I mean, a perfect example again on the Canadians. leaving for the U.S., whether to cash in an RSP, right? I mean, we see it all the time, right? And I know American counselors, tax and financial planning fellows, have strongly promoted the use of cashing in your RSPs when you cross the line and so forth as an automatic. I mean, every reference article I've read seems to have suggested
something I disagree with, but that's
which
beside the
I do too.